Whether you're buying or selling your home, get the benefit of expertise.
Hey, well, compliments to the show. You're really hitting on the subjects and you're telling the truth. I appreciate you.
Meet the team at dangemus.com. And now, filling in for Dan Gemus, your host, Joyce Blackmere.
Welcome back, everyone. Thanks for tuning in on this hot and steamy Saturday afternoon. I'm Joyce Blackmere, Director of Sales and Broker with the Dan Gemus Real Estate Team, and I have Aaron Blackmere, Sales Rep at the team, in studio with me. Hello, sir.
Hoya, hoya. How are you?
Good, good. I figured it out. So before we get to Ron, I'm just going to read a couple of answers that we got.
Yeah, hold your horses, Ron.
For why or what you loved about your neighborhood growing up. So we got one, going to the corner store to play in yo-yo competitions.
Yo-yo?
Yes.
Wow.
I love that.
Okay.
I love that.
Okay.
I mean, I can't yo-yo worth a darn. But
I used to try.
Listen, I think it would be cool to see.
Yes, it is cool to see.
And then we got another one. I grew up in Cottam in a small neighborhood. All of us kids hung out all summer long in the neighborhood playing baseball at the Millers. Great times.
Oh, yeah. Just getting a bunch of guys together and shagging flies or playing some pickup ball or even the road hockey back to that. That was childhood where I grew up.
Yeah, and we got one more, Aaron. This one's for you.
Okay.
Go Leafs.
Oh, yeah, knock it off.
Yeah, knock it off.
Not funny.
Hey, listen. Okay, so we have got Ron Bondy on the line. Ron Bondy, mortgage agent from the Super Mortgage team at Dominion Lending, and he's got a mortgage tip for us today, a reference, so to speak, of mortgage terms that everybody should know before they meet, or know and understand, I guess, before they meet with their mortgage agent. And if you don't understand them, then that creates a list of questions you should ask your mortgage agent before you make any big decisions. Hi, Ron. How are you?
I'm fantastic. How are you guys doing on this beautiful, very, very hot day?
Steamy, wonderful day. We're awesome. How are you?
I'm doing great. I was working out in the garage all morning, so I'm nice and sweaty.
I'm just slowly melting.
Oh, nice.
Ron, before we get to your segment, how about you tell us what is something that you loved about the neighborhood you grew up in?
So the neighborhood that I grew up in, I actually still live in. So I built a house next door to my mom. But what I loved about the neighborhood growing up is that you knew everybody up and down the street.
Yeah.
So you'd be riding your bike and you basically just, your arm would get sore from waving to everybody as you were driving down the street. You knew everybody, which does not happen anymore.
No, it's special, isn't it?
You almost felt like a celebrity waving to everybody, didn't you?
Well, exactly. Yeah, I know.
He still does.
Yeah, well, Ron is a celebrity.
I try. In my head, I am.
Yes. All right, Ron. So how about we get to some mortgage tips? So you have some terms that homeowners or potential homeowners should know prior to meeting with their mortgage agent.
Yeah, so like when you meet with your mortgage agent, you're getting a bunch of information all at once. Typically, a meeting lasts an hour, so you're getting so much information within an hour. And if you don't know a lot of the terms, you're going to be lost even more than what you are because they're throwing a bunch of numbers at you as well as terms that you don't understand. So everybody listen up. So like as simple as a mortgage. What is a mortgage? Like a mortgage is a loan that you get to buy a home secured by the property itself. And you'd be surprised if there's a lot of people that come to my office and they want to put a mortgage on a car. Like, okay, no, that's not how that works. You can put a mortgage on your house and pay off your car, but you can't put a mortgage on a car. Or, I want to buy a trailer. Or, I want to buy a business. Can I put a mortgage on my business? So, no, those are business loans. So there's a lot of people, as funny as it sounds, don't even know what mortgage really means.
Sure.
Principal. A lot of people don't understand principal. So principal is the amount you borrow. It doesn't include the interest you pay. It's how much you owe at any given time on your mortgage. Interest is the cost you pay to borrow the money. Amortization period. So amortization period is how long you're going to have this mortgage to pay it all off entirely. So a lot of people get amortization period and term mixed up. So the amortization period is always the longest one, typically 25 or 30 years. And that's the whole length of your mortgage. Now, the mortgage term is how long you're locked into that contract with that lender. So if you take a fixed rate for 5 years, you're locked in with that lender for 5 years. And that's your term. If you take a 3-year, you're locked in for 3 years. If you take a 3-year variable, well, you're still locked into 3 years, just the rate fluctuates. Monthly, biweekly, semi-monthly, and weekly payments. That's the frequency that your payments come out. And if you go monthly to biweekly, it saves you a little bit of interest. If you go monthly to weekly, it saves you a little bit of interest as well. So, but it doesn't save you a whole lot. So we always recommend that you line up your work pay to the weeks that you pay your mortgage. Just makes things a lot easier. If you get paid biweekly, set up your mortgage payments to be biweekly.
That makes sense.
Yeah, penalty. A lot of people don't understand why they're paying a penalty. Well, look, you're paying a penalty because you're locked into a contract. It's a binding contract with that lender for the length of your term. So, like, for example, we'll use 5 years again. And then penalty can be either 3 months interest 3 months interest or interest differential. Now, you don't want to get interest differential because that's the big one. that's the one that makes you cry.
Yeah.
Down payment. So these two get confused too. It's down payment and deposit, right? So down payment is what you're putting down on the home at the lawyers. Either you can either put as low as 5%, 20%, 50%, whatever you want. Now, deposit, a lot of people don't understand where their deposit goes. So Joyce and Aaron, when you guys collect a deposit from when you do an offer in real estate, so where does that deposit go? So
my pocket. Oh, I mean,
exactly. You wish.
No, it's from what the deposit is. It's usually put towards the purchase price or closing costs or something like that. Exactly. Whatever lawyers kind of decide or are directed to do.
So the lawyer takes your down payment, takes what he charges, title insurance, all his fees, and at the end minuses the deposit that you've given earlier to the real estate agent. Fixed rate mortgage. Fixed rate mortgage means that your rate doesn't fluctuate when the bank rate moves. So whatever rate you choose and you lock in, that's a fixed rate. Variable rate fluctuates with the Bank of Canada rate. An open mortgage. So a lot of people get variable rate and open mortgage confused. But variable rate just means that your rate goes up and down. It's 9 times out of 10 still a closed mortgage. Open mortgages really only make sense if you're going to have that mortgage for less than 6 months. So after 6 months, you've paid more interest than you would have paid for a penalty if you would have took a variable rate.
Oh, wow.
Yeah. So if anybody tells me I want a fixed rate or I want an open mortgage, I'm like, okay, how long do you need it for? And then we calculate the numbers, we show them the numbers and say, okay, you're going to be better off taking a variable if you're going to be in it for 7 or 8 months, right?
Right.
Because a variable only has a penalty of 3 months interest charges. So,
which is much better than the alternative.
Which is much better. Yeah, you don't cry as much.
Just cry a little bit.
Just a little bit. Pre-approval. So pre-approval and pre-qualification. So a lot of people, again, get those two mixed up. Pre-qualification is, Aaron, you tell me, hey, Ron, I make $50,000. How much can I afford? And I'll tell you, okay, at $50,000, you can afford a mortgage of $200,000. So that is just basically a conversation. It could be plus or minus 50 or 100,000. I could be off because I don't know what your debt is. I don't know Maybe you're giving me income that can't be used with the mortgage. But so pre-qualification is just a conversation. I would not go shopping on a pre-qualification. What you need to do is get a pre-approval. Once you get a pre-approval, anybody that does a pre-approval correctly, they collect all the docs, they verify everything, they pull your credit, and they check everything out so that when they give you a number to go shopping at, it is a good number. You can take that number and go shopping with confidence.
Yes.
Thank you for clarifying that one. That was a big one.
That's an important one for people
That's
to
a big
understand.
one. Yeah, that's a real big one. People don't understand because, you'll ask them, are you pre-approved? They'll say yes. Oh, who did you talk to at the bank? Oh, no, I just went online and entered in some numbers.
Right, exactly.
Yeah.
Okay, no, that doesn't count. That's a pre-qualification, not a pre-approval.
Right.
Yeah.
We have time for a couple more, Ron.
Okay, so I'll just skip to the big ones, GDS and TDS. So almost nobody knows this when they come in. Mm-hmm. GDS is gross debt servicing. So that's everything having to do with the new house that you're applying for. So your mortgage payment, your property taxes, and your heat, and if it's a condo, your condo fees. Now, TDS is everything that we just talked about in GDS, but it's total debt servicing, which includes car loans, lines of credit, credit cards, student loans, any other loan.
Right.
Yeah. So those are the two that really people need to pay attention to. Nobody really knows those two, but those are definitely ones that determine what you get qualified for.
Well, for sure, and especially if you're talking about getting pre-qualified and you're telling somebody, yeah, I make 50 grand, but you're not pre-approved, but you're not also, haven't said, but I have a car payment of this, I have whatever. So those ratios can change really quickly.
Oh, really quickly, because cars are very expensive right now, and buying a car could mean $100,000 or $150,000 worth of mortgage money for what you're paying for your car. So it's huge. It's huge. Like if you buy a car for $50,000, your payments would equal probably about $100,000 worth of mortgage money.
Yeah.
Wow.
That's why I tell a lot of people after, getting a house conditionally accepted or you buy a house, don't spend the time until the closing.
No, do not go to Tepperman's. Don't buy all your furniture on credit. Don't do nothing.
No Home Depot credit cards or anything.
Yep.
Reel her in for a bit.
Yep.
Perfect.
Just
Ron, if people
sit
have
back
questions about how to get pre-approved, they have questions about the home buying process, how can they reach you?
They can call me on my cell phone, 519-791-2961. They can email me at ronbondy@supermortgageteam.ca, or they can get in touch with one of your lovely agents. Yes, I just called Aaron Lovely.
Thanks, Ron.
He's blushing. His cheeks are red.
Awesome,
Ron. Well, thank you so much for joining us, and thanks for that information.
Yeah, thanks, Ron.
I'll take this time to also say, if you're thinking of making a move or you have questions about the real estate market in Windsor and Essex County, the Dan Gemus Real Estate Team is always here to help, and you can reach out to our team, anyone on our team, 7 days a week, 519-566-5565. You can also find us online at dangemus.com. You can check out all of our active listings on our website. Just go to the featured listings tab, and you can learn more about what we're all about. Yep. And we'd love to come out. We'd love to come out and give you a free home market evaluation. We'd love to come out and discuss your plans, because it's really important to have a game plan in a market that is going up and down all the time, and understanding what that means for your individual circumstances.
And it's good just to know what kind of equity you have in your house.
Yes. Oh, 100%. 100%. Okay, we're going to take another quick break. And when we come back, we're giving away a gift card for the Richmond Popcorn Company. Aaron, what caller should we take today?
Everybody get ready. Okay. Number 1.
Caller number 1. 519-792-2559. 519-792-CKLW. Caller number 1 is getting a gift card for the Richmond Popcorn Company. And when we come back, we'll also tackle a listener question as well. Still more to come. Stay tuned right here on the Dan Gemus Real Estate Show.